Life insurance company's revenue account. Form A shows the revenue account of life insurance. If you are taking general insurance, for that we will be using Form B. So this Form A will say that how you have to prepare the revenue account of the particular life insurance company. Okay, so this is the format which shows you how to prepare the insurance company's revenue account. Okay, you have to write first Form A. RA means revenue account, and you have to write the name of the insurance, that is company name, insurance company name. You can write Star Insurance Company, HDFC Insurance Company, whatever the name of the company, you should write on the top. And if they have given any registration number and date of the registration with IRDA, that can also be mentioned at the top. If it's not available, you can leave that. Okay, next is revenue account for the year ended 31st March 2000 or whatever it is, the year you have to mention here. Okay, so in the revenue account, we will be having different columns. Generally in the problem, when we are preparing, you will be getting only the current year information. You will not be, they will not give you the previous year balances. As a BCom student, you will be getting only the current year balances, current year amount. So only we are going to write the balances of current year only in this column. This column we are not going to use it. Okay. So what will be there? Generally, this revenue account is divided into 4 areas. That means total A will come in 1, total B will be another 1, total C and total D. What will be there in total A? You know very well, revenue account means expenses and income together will be there. So in revenue account, total A is consist of all the income of the particular insurance company. Anything income, if you feel, that will come under the category of total A. So this income also you are going to divide under different heading. First income is major income for any insurance company will be premium is the insurance company's main sources of income. Like how other product based companies and all will be having sales will be there. Like that, here premium is the main income for the revenue, this insurance company's revenue. Okay, so in the premium, what is net? Some adjustments will be there. That what is the net adjustment? Already I told you, reinsurance is there. So the reinsurance ceded and accepted. So premium, whatever directly you are receiving from your policy holders will be premium. And what is reinsurance ceded? Reinsurance ceded is nothing but the amount what you are going to share with the another insurance company as you are going to give it to them. So you are going to reinsure your premium, and that amount, whatever you are paying to the other company, that will be adjusted with premium. You have to minus because it is going out from your hand. So you have to minus it. Same way, some other company is giving it to you, and you're going to receive the premium from other company is called as reinsurance accepted. This should be added. So when you're paying reinsurance ceded, you have to minus, and reinsurance accepted, you have to add it. So these 3 altogether, you can get premium earned as a net amount. So all these will be coming under the schedule number 1. So you have to write as a schedule number 1 below the revenue account. You have to make the separate like schedule. Schedule 1 says the premium earned or whatever it is. Okay. Next is, other than this, what else they will get? Income from investment, because they are collecting the premium. That premium will be invested in some other, they may be investing in shares, they may be investing in debentures, or they may be giving as a loan, whatever it is, long-term debts, whatever it is. From that, they will be receiving some income. So what are the income? Some examples are given here. So interest, dividend, rent, gross. What is gross means? Sometimes interest, dividend you are receiving, you have to pay tax on that. So if you are paying tax, that can be deducted, then remaining net you can write it as a income. Okay, so interest, dividend, rent, etc., whatever it is there, from that amount, any tax is deducted, TDS is there, that you have to minus and write the net amount as a net income. Same way, you have invested some amount in the investments. That investment, if you are selling or if you are going to redeem or whatever it is, when you are doing that, if you are receiving any gain or profit, that can be added. If there is any loss in sale of investment, then you have to minus that. Okay. Next is, sometimes the revaluation happens, fair value, they will change it. If there is any gain in the revaluation, add it. If there is any loss in the revaluation, then you have to minus it. Other than this, any other income is there, that also you can specify. Generally, one income you will be receiving, that is called as like consideration on annuities accepted. What is that annuities means? Just simply in future, you will be paying a annual payment to the policy holders. What is that? For example, pension. So as a pension, you will be paying every month or 6 months once to the policy holders. For that, what is the consideration the company is going to get? That is called as consideration received from annuities or against the annuities, whatever it is, that amount will be coming under other income. One example. Other than this, any other income they are going to receive, that can be listed in total A. So all this will be coming under total A. So these amounts you can write it in the A column and take the total and write the total in the heading total A. Next is B and C. What is B and C? Both are expenses. Okay, this expense again we can divide it into two categories. One is amount paid to the policy holders. Another one is amount paid to other than policy holders. So whatever amount you are paying to policy holders will come under the total C. And other than that, anything you are paying to others mean that will come under total B. What mainly this commission is the one of the major expenses for the insurance company. So this amount paid as a commission, we can write it under the schedule number 2, because so many amounts will be there, some adjustments will be there, outstanding is there, whatever it is there, all this you have to adjust, a net amount you have to write in the revenue account. Okay, so this adjustments, everything you can make in the schedule 2. Next is operating expenses. Any other expenses, all the administration and office expenses, management expenses, everything will come under the category of operating expenses. So any expenses related to insurance business will come in the operating expenses. So what you can do, you can open the schedule. Under the schedule, list out all the expenses. If there is any adjustment is there, outstanding is there, everything you can add. And net amount you can write here. That is called as operating expenses related to insurance business. After that, any provision is there, bad debts is there, provision for tax, any other provisions are there, all will be coming under the category of total B. And total C is exclusively for policyholders. Anything you are paying to policyholders will be coming under the category of this total C. Benefits paid. What is benefit paid? Benefit paid is nothing but any amount you are paying as a claim by death, claim, whatever it is. See, here it is there. So, schedule 4. See, insurance claim, death claims or annuity, pension, anything you are paying, all this will come under insurance claim. This sometimes what happens, insurance claim, you have taken from other company means like you have to pay. That is reinsurance. Reinsurance you have accepted means you have to pay the claims. And reinsurance ceded means they will pay the some claims. So the reinsurance ceded you have to minus, and reinsurance accepted you have to add. This adjustment we will see when we are doing the problems. Now, as of now, anything you are paying to the policy holders, that will come under the category of benefits paid to shareholders, benefits paid to policy holders, all will be coming here. Sometimes bonus will be there, bonus by cash, bonus in the way of reduction in the premium, surrenders, all will be coming under the category of benefits paid. Okay, so all this you take and write the total in the column number benefit paid against the schedule number 4. Okay. So now you have got all the expenses are over. Now we are going to find out the surplus. How to find out the surplus? Very simple. You can take the expense income. The income are calculated under total A. So total A minus expenses are B and C. So minus B minus C, you will get the deficit or surplus. If you are getting positive number, then surplus. If you are getting negative number, then it is called as deficit. Okay. So you got the surplus now. What are you going to do with the surplus? The surplus, you take out of the surplus, you're going to give some amount as a dividend to the shareholders. Some amount you can reserve for the future. So this is called as appropriation. So any amount paid to shareholders, like a dividend paid, will be coming under the category of appropriation. Or you have reserved some amount for the future. that will come under the category of transfer to reserve. You can specify the reserve name here. And remaining, that will be considered as balance fund for the future appropriation. So this is called as appropriation. That means how you are going to segregate the surplus in the account, different account, that is called as appropriations. Okay, this is called the revenue account. This is the way you have to prepare the revenue account. So majorly for three category: revenue and expenses. Revenues will come under the category total of A, expenses will come under B and C. C is nothing but any amount payable or paid to share that policy holders will come under C, and other than that every expenses will come under the category of total B. Okay, this is the recap of revenue account.